Ajit Isaac, CMD at Quess Corp, joins in to talk about how the demerger is panning out. Ajit, hi, morning. Good to have you on the show today. Tell me a little bit more about your demerger. What kind of prospects does it throw up? The value unlocking, etc. And what was the rationale behind the same?
Sure. So I'll start with the third part of the question. What is the
Sure.
rationale? The key things to look at here is that our business is now 17 years old. So we're no longer a startup. It's a mature business. And over the years, each of the business verticals have become scaled, mature, and market-leading entities. And each one has its own rhythm, its cyclicality, and nuances. So one-size corporate strategy does not fit all three businesses individually. And there are nuances of capital allocation, compensation structures for staff, shared services structures for each of them, and IT investments that are required. So that's what drove the rationale for the demerger process, and we think that this will unleash a sort of simplified structure that the market has also been looking forward to. A renewed management focus on each of the businesses, a changed capital allocation strategy that's relevant to each of these specific businesses, a flexibility in approach to markets, and lastly, a clarity of investment thesis for investors coming into each of these specific demerged entities. So that's sort of the summary of why we did it and what we think it will, what advantages we can derive for each business.
Ajit, but just to scratch that point further, you also mentioned that you're looking at improving the profitability, right? Return on equity is something that you're targeting to improve further. What is that target figure in mind? And also in terms of expanding the international presence, what's the plan with respect to expanding that, and which business will be focused a lot more on international?
So our North Star has always been 20% as an ROE for each of our businesses. Before our IPO, we were at 26%, and we think we can get back to 20% for two of the three demerged entities in the first 1 or 2 years after we demerge. And the third, it could take a little longer. The component of international business will be most for Digitide, which will be the IT business. We have a focus to enlarging the international presence, particularly in the BPM space, and a lot of investment in terms of management resources, time, and our structure and our strategy will go into that.
Did talk about Digitide. What is the outlook on revenue visibility as well as EBITDA? Because you have indeed set a very aggressive target of, I think, $1 billion revenue for Digitide alone. What drives that kind of confidence, and what do you think is going to throw up the numbers?
So we've got three businesses in Digitide. First one is our BPM business. The second is an InsurTech business, and the third one is a HRO business. Our BPM business is the largest of the three. It's largely a domestic player right now, but with a growing international presence. So we think this is going to be the basis of growth for the company. We are at about $300 million of revenues today, and we think it can grow by about 20% every year. We've averaged that almost for the last 3 years. So there is a confidence from our past experience in this business that we can grow by about 20%. So organically, we can reach to about 700 million, let's say, in about 5 years' time. And the balance 300 will come through a combination of inorganic growth and also some new service lines that we can develop over the next few years.
So point taken, but I just wanted to talk about the staffing business as well, because you are expecting 30% EBITDA contribution to come in from the international business there. Given the fact that there have been headwinds with respect to the entire staffing momentum, not only in India, especially IT, but globally as well, what kind of headwinds do you envisage in the staffing business specifically?
So staffing, by number of headcount for the world's largest staffing companies are not growing too much, but profitability is growing. And the reason why it's happening is because the business mix is changing and market sizes are changing in the more profitable ones. So that's, I think, what will happen to us also. For example, in Singapore, we have a business. Singapore, we are sort of market leaders. We have more than 1,000 people working there, mostly in IT staffing. Margins are maybe 9 to 10%, but the Singaporean economy itself grows only by about 2 to 3% at best. So you can't expect that business to grow by, let's say, 15 to 20%. However, if we do open out a larger American business, a North American business, we already have maybe about now 450 people working in North America. But if it becomes a larger business there, the margins are better and the rate of growth of the American market will be better because we have a smaller base. So that's another market which is looking attractive. And the third market is Middle East. In Middle East, we also have in excess of 1,000 people right now, and margins are close to about in the high teens there. So we think that there is potential to ride on the economic boom that's happening in Saudi Arabia and Dubai right now to secure more professional staffing contracts in the Middle East too.
Okay, point taken. So that's about the staffing business as well. But overall, talk to us about the targets that you have set for the other business as well. Blue Spring, what's the outlook with respect to the facility management business there?
Sure. So Blue Spring is, a company that will leverage opportunities emerging in a new India. The scale of change that's happening in India today is unprecedented. There are 3 or 4 sections of change which I want to briefly highlight before getting into some specific numbers. There's a farm to non-farm movement that's taking place. Every year about 9 million new non-farm jobs are created. There's a movement from the informal to the formal sector. Formal workforce share has grown from 9% in 2018 to almost about 15% today. And similarly, there's a growth from the unorganized to the organized sector. The number of GST registrations have also grown. So all of these changes contribute to a larger workforce and a larger set of services. On the other side is urbanization and manufacturing. We find that today 40% of India will be urbanized by 2030. And anywhere you look around you, there's construction going on. It could be metro railways, it can be airports, it can be highways, it can be ports, it can be public utility places, places of public convenience, etc. All of these places need maintenance. And that expanded capacity that India is creating is what's creating the opportunity for Blue Spring. So as our economy goes from 3-4 trillion to about 5 trillion, the penetration of business services in that will also expand from about 1% to 5%. So we are the largest business services organized player in the business services space, and we think that a large share of the opportunity could come our way. So these are sort of the tailwinds that we've got. But in Blue Spring itself specifically, our margins at about 5%, we think we have a potential to increase our margins, expand our margins by about 100 basis points. So our profitability, our EBITDA margins could be around 6% or so. And growth here could be around 20%. So business here is in 3 verticals. One is in facilities management. The second one is in telecom infrastructure. We maintain telecom towers and installations related to network infrastructure. And the third one is an operating asset maintenance business in the industrial space, where we maintain power plants, steel plants, and large industrial equipment, and now increasingly in renewable energy too. So all of these are sunrise areas of growth, and we think we can ride on the new India and the emerging opportunities that's coming from there for Blue Spring.
Okay, Ajit, on that note, we'll let you go. Appreciate you making time and speaking with us. So that's the management of Quess Corp, detailing out the rationale behind the demerger and the growth forward for all the 3 businesses. The stock holding up with a gain of around 1%. But time